This is the video accompanying Insider Newsletter issue 330. And with me, as always, is Brad and Chris. Hi, guys.
Yeah. Hey, Lucas. All right.
Good, eh?
Let's get on with. Let's get on. We've got a lot of slides today, I've noticed.
Yeah.
The first one is about Brazil.
Yeah. You spoke a bit about Brazil, Chris. I'll let you talk about it. But before, there's an interesting thing about Brazil. So let's say, for example, folks, people will talk about how much the Brazilian stock market went up. All right. So from, let's say, 2003 to 2000, what was that, 2007, and it was up 1,500%. But the reality is, you would not have bought down there at the bottom in 2003, and you would not have got out at the top. So let's say, and like Brazil was looking really attractive, unloved, unwanted, in early January 2000, top of the tech bubble. This sucker, it dropped 68%, let's say 70% from 2000 to 2002. And of course, it rallied. But, the reality is, and even if you only bought it, okay, let's say you missed half that, you still bought it and you lost 30% thereafter. And so if you'd bought at, 1st of January 2000, near enough, and if you'd got out in 2007, you made what's that, about 370 odd percent? Is that about the red line there, Lucas? I can't quite bloody see it. It's not so clear. Yeah, 350.
It's something like that, 356.
Yeah, what a difference just if you're buying it after it's gone down a little bit. Anyway, so that's reality, folks. But yeah, so that's, in order to make these big gains, you've got to often go through a bit of pain, and often it takes a bit longer than you expect. And the next slide, this is the actual relative. This is Brazil relative to the S&P 500. It's looking really attractive. Look at that. Look, that being said, pretty much everything looks really attractive relative to the S&P 500. Across the board.
Overvaluation stuff.
Across the board.
But I think that's part of the story, is if we're correct in our assumption that we're going to have a rotation of capital from growth assets to value and from tech to energy and food and Maslow's hierarchy of needs, then in that respect, Brazil stands out as like a clear winner because it's simultaneously has all of those components. It's got the vast majority of its energy complex is all domestic. It's like 87% of it is like hydroelectric and biofuels and stuff like that. And then, of course, they have energy production themselves with Petrobras, and they have many of the critical minerals and resources that the world needs, like graphite, lithium, all this sort of stuff. And then, of course, they're a massive agricultural producer. And the thing is, so that's all your sort of Maslow's hierarchy of needs. And then simultaneously, they're outside of that conflict zone. Moving those goods to Western markets it's not currently contested. And that's going to become a critical relative value proposition, I think. It's not in the Red Sea. It doesn't have Hormuz problems, any of that sort of stuff. So as the world moves towards, I think, repricing geographical locations that don't have supply chain constraints, South America and Brazil in particular stand out as being pretty damn good. So, I mean, this case of Brazil is like, it's got water abundance. It's got because that together with Uruguay, it sits on that world's largest aquifer. I'm trying to think of the name of it. But it also has vast amount of its agriculture is rain fed. Whereas if you look at like the Punjab or if you look at California and stuff, they're all using groundwater and they have to pump it and irrigate and everything else. Whereas that's not a constraint in Brazil. So it's, and it's just cheap.
Well, aren't they moving to the right too, Chris, instead of the whole lefty thing is?
Yeah, so we've got, I don't think, it's not like we're buying it with the anticipation that happens, but that certainly looks to be potentially in the cards. Now, if that happens, probably that's going to be an additional boost for the economy. But again, it's not currently priced, and I don't think it's necessary for us to be able to make that trade. Kind of like, when we bought into Argentina, we weren't buying Argentina with the Milei's going to win, yada yada yada.
Yeah.
But it was icing on the cake. So, yeah.
Very good. Very good.
Goodness.
Position size right. I think it's a good trade. All right.
Mm-hmm.
So here's that other relative value. Like Brad, that chart saying S&P versus Brazil in this instance. Like, the S&P, which is most of the S&P is also the same as the Nasdaq. Like, you're looking at that market concentration of the US and previous situations.
What was this, Chris? Is this a top 10? Hang on, Mark.